There, I hit the button. So, hi everyone. Welcome to another edition of WCM Fireside Chats. Monday, August 24th. I can't believe that the summer is just flying by the way it has. It's just been a crazy year, and the year's just keeps on going along. Before long, I live in northern Indiana. Before long, there will be snow on the ground. So it's just going to be crazy. So, Kara, when do you get snow on the ground in Alberta?
Sooner than you do. That's a loaded question. Could be anytime, really, but generally October.
Okay. All right. Okay. So thanks everyone on Zoom and Facebook Live for joining us. We were going to talk about finances, financial planning, different financial things today with, we got a couple experts on, Lindsey Foos from Fireside Accounting. She has been, Fireside Accounting was started in 2016, and she was just telling us about how she's been RVing and living full-time. RVing. Now, did you RV full-time? Do you still RV full-time?
No, I don't now, but we did it for 1 year. So we started in a fifth wheel, and then based on how much we were traveling, we switched to a motorhome. Just thought it would be a little easier, especially, you know, one night not having to unhook everything. So yeah, so we did it for about a year.
Okay.
And then Lindsey is a new mom now, so.
Yeah.
Yes, yeah. So we've got an almost, he'll be 10 months tomorrow. So he's kept us very busy as well.
Wow. Okay. Okay.
Wow.
Yeah.
Congratulations.
Yeah.
Congratulations.
Thank you.
And she and Lindsey had been working at an accounting firm that worked with a number of restaurants, and now you mainly just work in the outdoor hospitality industry, correct?
Correct. Yep. So through Fireside, we service only RV parks, RV resorts, and campgrounds. And then I'm also the VP of accounting for Horizon Outdoor Hospitality, which provides, you know, third-party management services, soup to nuts, basically, for RV parks, campgrounds, and RV resorts.
Okay. And then Paul Bosley is a managing member of Business Finance Depot. And Paul, just kind of give us a little bit of the background of the Business Finance Depot and what you guys do there.
Well, in regards to RV parks, we've been the finance company for Yogi Bear's Yellowstone Parks for about 5 years. And that ended up dragging us into ARVC. 2 years ago, I was asked to be the instructor for the ARVC National School for really 3 courses. Cash flow management, budgeting, and finance, which I completed in 2019 and 2020. And I was also asked by ARVC to speak at their national convention in Knoxville for finance. And I was one of the faculty members with Brian for the recent ARVC Prospective Owners Workshop. And now, because of that, not only did I meet Brian, but I also was asked by Larry to be the finance person for startups for KOA. So we've been pretty involved for about 5 years, but it's accelerating.
Wow. Yeah. Oh, well, that's cool. And then we also, for those of us who have been before, we have a couple co-hosts, Brian Searle from Insider Perks, who CEO and founder of Insider Perks, a marketing firm specializing in the outdoor hospitality industry, and Kara Brudigam from the Canadian Camping and RV Council. And she lives up in Alberta and just climbed a mountain this past weekend. So amazing.
I appreciate how impressive this seems to you. I climbed, so maybe I'm
Indiana.
Yeah, you have to remember he's from Indiana. There's
no mountains
form there. Like it's just.
I mean, that's pretty much what Ohio looks like too, Brian.
I know. Yeah.
I really appreciate it, frankly. Yeah, thank you. I'm obviously desensitized to how great it is, but yes, I did climb a mountain. It was lovely.
Okay. All right. Okay. But, Well, I guess let's just dive into some of the topics. I guess, it's been a really crazy year for campground owners throughout the country, and I'm sure in Canada too. And just, you know, financial planning is such a huge deal for a business. I guess, Lindsay, I guess, what are some of the stuff you've been talking about with campground owners as far as financial planning? How do you, like, as a business owner, how do you take this year and kind of add it to your financial planning, I guess? How does it impact your financial?
Yeah, great question. So, there's kind of two pieces to this. The first would be, for parks that are seasonal, they don't, have a whole lot of time left of their season, but for parks that are year round, this might apply a little more for. But a big thing that we're seeing that's helping right now is for the rest of 2020 is forecasting. So alternatively to budgeting, budgeting is where we're saying, hey, it's the fall, let's plan out what 2021 looks like. Whereas, forecasting, we're going to be looking, 60 to 90 days out. So, we would be taking the budget and saying, okay, if we're looking at 60 to 90 days, what do we know now that's different from maybe when we budgeted before? So, looking at your reservation program and seeing actual revenues that are going to come in for that 60 to 90 days. And then, looking back, 30 days, let's say, and kind of seeing, well, how did you stack up to budget, and kind of making some reasonable assumptions with, based on trends that we're seeing, what's in your reservation programs for the upcoming couple months, getting an idea of what money you'll actually have. And then, on the expense side of that would be looking at, expenses for the next 60 to 90 days. So, maybe you previously budgeted lots of money for activities, but, due to social distancing guidelines, things like that, maybe you don't have those same activities planned. And so that you can maybe plan to not spend as much over the rest of the year for activities, or maybe store inventory, things like that. And then, kind of taking all those things into consideration can help you get an idea of what the rest of your year looks like. So then for 2021, that's definitely where it gets a little trickier, for everybody. Those first several months of this year looks very different. So what I would recommend, and what we're doing with our parks, is looking at, 2019, and kind of looking at maybe what you budgeted originally for 2020. And again, kind of making some reasonable assumptions. So when you're budgeting, it's a guess, right? So it can be an educated guess, but it is just kind of making those educated assumptions of what's going to happen. So, like I said, I would recommend kind of looking at 2019, what was budgeted for 2020 for those first few months, and then for the whole rest of the year of 2021, looking at again 2019. Maybe what did you originally budget for 2020, and how's 2020 stacking up? And again, kind of looking at all of those in comparison with each other, and making those guesses of, well, what can 2021 look like? So that's kind of how we're approaching it at this time.
So with
Okay. Yeah.
can you give us some examples of what's changed maybe in some of the parts that you work with, as far as
I can't hear Brian.
Yeah, Brian, you're kind of distant. Okay. He'll get caught back up to speed. I got answer his question once he sorts it out. Lindsay, I guess, when a park owner is looking at making purchases for the next, like a lot of park owners will do like plans, I imagine, for park model RV purchases, or if they're bringing in new accommodations. How does it impact those plans? Like, should they put those plans on hold and wait?
Sure. And it's a tricky question. It's a great question. Obviously things are going to depend on park by park. What cash do you have? What cash can you acquire? And, you know, I'd say this, our outlook is certainly positive. You know, people generally haven't stopped camping. And what we're seeing, at least with the parks that we work with, is a whole new group of campers, you know, lots of, you know, first-time RVers, things like that. And so what we would say is when you're looking at some of these capital improvement projects is looking at, you know, what can maybe draw people to your park, and especially this new group of campers. You know, what are things that might draw people to want to stay at your park? And so, you know, if you're looking at, you know, things like park models, you know, that might be that better investment than, say, you know, an upgrade to what your office looks like or what the store looks like. You know, while those are nice, those aren't really going to add to the bottom line and draw people in to your park. So I'd say it's all about looking at, you know, maybe amenities that can be added to get people to want to come to your park. And, you know, and then with that, you know, if you're looking at projects, I'd say another good thing to look at is kind of investing in your staff and kind of focusing on that guest experience. So again, if you're really uncertain about, you know, cash flow and, you know, do we spend money on these big things? You know, it is very park by park, but things that, you know, I think everybody can focus on is that guest experience. And so, you know, investing in staff that can help, you know, maybe these first time RVers. I know when Scott and I started out, it was really stressful getting to a park. And are we hooking up right? Like, do we know what we're doing here? And so if we can have, you know, staff kind of jump in there and assist these new campers that we're seeing and get them comfortable, you know, kind of reduce their anxiety, and kind of servicing them, you know, that might be money really well spent, is making sure that you're perfecting that guest experience, you know, and then figuring out some of those large purchases like park models and things like that. You know, maybe some of those projects you might have to plan a little more carefully, or maybe those are things to hold off on, but focusing on some of the things that are maybe a little less expensive that can make a big impact and draw more people to your park. Those might be the types of projects or investments that, you know, might be really good to focus on right now.
Okay, yeah.
Better, Ben, or worse?
A little bit better. Not much.
All right, I'm going to switch it back to my in.
Oh, that's better.
Better?
That better?
Yeah, that's a lot better. Yeah.
I just used my in laptop one. I don't know what's wrong with my mic. So anyway, I was going to ask Lindsey before, when you're doing your forecast, what have you seen some of these parks adjusting based on some of the things they're going?
Sure. Well, I know the biggest thing for us, you know, obviously March, April, May were certainly a little rougher, but like what we're seeing with June and July is we're kind of working through, you know, like at this point, you know, our team's kind of looking at, you know, twice a month, kind of doing some sort of forecast update. And what we're really seeing in particular is revenue higher than budgeted, which I don't know if at least anyone on our team really didn't expect that, but that's kind of what it is people wanting to get out. And so we're seeing that revenue's coming in higher than we thought. And so that's certainly helping us to catch up to where 2020 was originally budgeted, but then also affording some of those maybe smaller improvements or additional expenses that did need to happen. It's helping to cover those. So that's kind of what we're seeing.
Okay.
So, okay. And then I guess, Paul, just kind of give us a viewpoint of how the COVID-19 crisis has been kind of impacting you and what you do, I guess, working with, you work with a lot of developers and I guess you've worked with some new park owners too, I guess. And you work with Jellystone and KOA now, so.
Well, there's probably two different ways of answering that question. Part of it, there was about 8-week period of time where a group of us volunteered with ARVC to help campground owners get through COVID and answer questions about the SBA programs, the PPP loan, in the EIDL loan. So that part of the answer has to focus on the existing campground owners that were shut down in different states and had to figure out how they were going to deal with it from a financial standpoint. You know, like what Lindsey was just talking about, how did this whole thing affect their budget? Because obviously they had budgeted not to be closed, like hardly anybody, and whether it's campgrounds, restaurants, were budgeted to be closed. So that part of it had more to do with damage control, probably, because those two programs, the SBA launched the PPP and the EIDL programs, were to help any business, including park owners in the U.S. Then the second part of it is RV sales is through the roof. I think Lindsey mentioned that already. I'm one of them. We bought an Airstream trailer because we're just going to,
Nice.
you know, I've seen a lot of the national parks. Actually, I have a double major from college from 100 years ago. One of them is recreation and parks. I wanted to work in the parks department. You know, that's what I wanted to do, actually, as a person that graduated from college. You don't hear that much, that's for sure. But, you know, it goes back with my life, you know, at least a half a century now almost, and something I just wanted to do. So, you know, as a startup, you know, you have a lot of developers that are out there that are saying, hey, this park system is going, I mean, the campgrounds and RV parks are going to be a way to earn money. And a lot of the people we've talked to own land, and it's undeveloped, and it's somewhere they feel would be a good destination point. And we've dealt a lot of times now over the last couple of months with different people that have contacted us to see if they could get financing for a new park. So in that part of the answer, it's you know, people are putting their money into the park industry because they think it's the way to go in the future. And I happen to agree with them. I think the industry is going to take off. You know, I can give you a totally different perspective, and I'll make this short, but I've been in the fitness industry for 46 years. I owned and operated health clubs. I sold them, and I speak at all the industry shows. I've been active in the fitness industry my whole life, unlike the park industry, where I've only really been active as an entrepreneur for 5 or 6 years. And that industry is going through a total change, and it's not a positive change. So, you know, you've got COVID that's impacted two industries that I'm very involved with. In the case of fitness, it's been a negative impact. And in the case of campgrounds, it's been a very positive impact.
So I'm curious, Paul, we had a show on this before, but I just want to get your quick input on it. How is financing going? Like, are banks tightening up?
No. Okay. What's happened is it's kind of interesting. There's an old saying to separate the men from the boys. You know, because we deal with lenders for a living. You know, we've got a lot of lenders that we work with because our company, technically, we're an agent of banks. So we have selected a lot of different lenders over the years to be under contract with. And some of the lenders have really backed away, you know, boys, you know, no harm intended, girls. I mean, you know, it's a saying. To separate the girls from the women. And I never heard that one before, but I heard the men from the boys. So I want to be politically. So anyhow, you know, the boys kind of backed away, and they said, geez, we're going to wait until the, you know, COVID clears. And then the men kind of stepped up, and there's a lot of SBA lenders that have gotten very aggressive. So, I mean, that's a long answer to your short question, Brian.
Yeah, I appreciate it. Thank you.
You're welcome.
Yeah. So I guess, Paul, when, you know, on the financial side, I know you've taken part in a lot of our webinars. I think you were just on one last week. I guess, what are some of the questions you get from park owners as far on those, you know, what are some of the questions you've been getting from park owners on those webinars, or some of the concerns you're hearing from people on those webinars?
Well, the most recent one was really just directed for the two programs, you know, the SBA programs. The PPP program is stopped, you know, they're not funding anymore. So now any questions I get are related to the forgiveness aspect of it, which is really still work in progress. You know, they've tried to simplify the forms. If you want, I can put a link out for people if they want look at a pretty good website that talks about the forgiveness area of it. So the other part is for the EIDL, the SBA Emergency Injury Disaster Loan. And that's the same loan program that's out there for, like, for instance, if people get hit with the storm in New Orleans and Texas, that's the same program. It's no different than the program that's been out there for years for anybody that gets impacted. What the SBA did based on the government, telling them to do it, is they created the program nationally for COVID, and that's still available. So if people have been negatively impacted, that is a great loan program. Our company took part of it because we didn't have any SBA loans funding, and that's one of our main sources of revenue when the loans fund. We ended up getting an EIDL loan, and it's been terrific, because you have no payments for a year. It's 3.5% APR. All you do is you kind of figure what kind of money you lost. So for instance, going back to what Lindsey was talking about, if you looked at the budget for this year and then you lost, let's just say 50 grand in revenue based upon you being shut down, you just get an EIDL loan for 50 grand and it's 3.5% interest, 10-year term, no prepayment penalty. I mean, it's a great program. So in this case, unlike many cases, the government really got it right, with both of these programs. And that's what people were talking to me about.
Okay. All right. Yeah. I guess, Kara, up in Canada, what are they? I know the parks up there have such a short season. What are you hearing from park owners as far as like a financial impact? And then what's kind of being offered by your government to kind of offset some of those losses if they have any?
So currently, I think it really depends on which part of the country the parks are located in. Certain areas are really, really restricted in terms of welcoming guests still. So those parks are having a harder time, out on the Atlantic provinces, on those islands. They're pretty closed up still. And so those parks are still, they've had a really tough summer. In other areas of the country, I'm hearing, revenue numbers are kind of record setting at this point. So it's really geographical and kind of political, frankly, at this point where things stand. The Canadian government did release they did a $40,000 small business loan. $10,000 of that loan is forgivable. So you only have to pay $30,000 back and have a couple year, certainly not 10 years, but a couple year window interest free, 2-year window interest free, and then after that, I'm not certain actually what the interest rate is for repayment afterwards. I personally know of several park owners who applied and received that loan quite quickly. I actually do some bookkeeping work for a couple of parks, and they both of them are just kind of sitting on that money at this point because their revenue has looked really good unexpectedly. But absolutely that hasn't been the case everywhere. I think there's an appetite specifically from campgrounds to see some sort of seasonal relief programming specific to seasonal businesses because of the limitation to their operating time frame and the calendar. I mean, we're inching day by day closer to closing day, and then you have 6 months before you can make any revenue again. And a lot of those static expenses don't go away. And I think certainly in the places where revenue has been good, those parks are probably in a decent position to do things like make plans for projects and investments and stuff in their parks. But in those spots where things have been harder this summer, there's significant concern about just making it through the winter financially. So we're hopeful. We're kind of doing some work to try to put some pressure on the right bodies to provide a little bit more support to those areas specifically, but nothing yet.
I guess, I'm not a park owner, so I guess I would look at this year, some parks are doing fantastic. Like some of them, that we've talked to have said that they're over last year's revenue. that they've had more people than they've ever had. It depends on the area.
I talked to is either worst flat or most are up tremendously. I mean, there are outliers, to be clear, just like there are in Canada, but yeah, that's the same story we're hearing too, which is great.
Yeah. So go ahead, Kara.
No, I was just agreeing. I think it's great. I think the industry is quite fortunate, the position that they're in at this point compared to a lot of, like Paul was saying. I mean, we're seeing tons of other industry really struggling. So I'm thankful for sure.
So I guess maybe like a knee-jerk reaction might be, hey, I did so well this year. Next year is not going to get any worse. But I guess, if you do a devil's advocate thing, it could put, what happens if this virus goes on? Maybe we have to do more shutdowns, maybe it impacts our spring again. I guess.
I'm the devil's advocate one. You can't take my role, and I'll have nothing to do on the show at all.
And maybe a super bear comes and like wipes out a ton of campgrounds. So, how do you, Lindsey, have you had any discussions with campground owners that are like, oh, we're going to spend all of this extra money on stuff, and you kind of have to like rein them in and be like, well, maybe you should save some of it, I guess. Saving is hard.
Yeah. And I do think a lot of people are, because there's been talk, well, maybe, especially for our year-round parks, the virus could get worse, like there could be increased restrictions again. And so I think at least most of the parks we work with, that is kind of the mindset of, kind of holding back on some of those things. And then, one of the things we're trying to help everyone focus on too is, ways to kind of get additional cash now, even if, revenues have been great, as we've seen, anything can happen. And so, some of the things that we're doing and recommending for, getting cash or just ways to kind of get some of that now, would be, first, obviously, yes, if you need loans, definitely, an option there. Seeing if there's payments that you regularly make, maybe you already have a loan, seeing if your bank's willing to do any sort of deferral. Maybe you don't have to pay a few months and they, tack it to the end. That's an option. We've got a couple parks who have sold off some old assets that they didn't need anyways. That just helped generate some additional cash, to help cover some bills. Two big ones that I think everyone can take advantage of, and particularly seasonal parks too, would be looking at your reservation policy. Most of our parks take full deposit up front. And so provided that you have a fair cancellation policy. And so that allows them to get more cash now, and then just figuring out the reasonable amount that they need to keep on hand, should they have to refund a bunch of people like everyone had to do at the beginning of this year. But that allows them to get some more cash now. So as you're opening up your 2021 reservations, looking at, do we want to change our reservation policy and get some more cash up front? And then just with a maybe more lenient cancellation. And then with that, on the cancellation side is looking at your cancellation policy. We've got some parks who have tried to steer folks to a camp credit versus actually refunding that cash right now. And so, if this virus, does get worse and maybe there's fall reservations or snowbird reservations that folks want to cancel, we're trying to kind of steer people towards a camp credit. Sometimes that's not popular. However, we've got several parks who have also offered like additional credit. So if you take a camp credit instead, we'll tack on an additional 10% that you can have to spend in the store, or, add another day to your reservation. So giving them some incentives to not have to refund cash now. So those are some ideas that people can take advantage of to try to, the cash that they do have, try to hold on to as much of it as possible.
Okay.
What about unique things? So we could do moonshine, we could grow cannabis, there's all Colorado, right, Lindsey? So you can
Sky's the limit.
You got to get however you can. I'm just saying, we got to think outside the box for people here.
Yeah, definitely.
I guess
What about the dollar? The dollar's declining too, so we should probably take payments in gold bullion. I mean,
Maybe.
Dream world.
yeah. I guess what really surprised me at the beginning of all this was I didn't realize how many parks took like full reservation amounts, like the full amount at reservation. And then when they started getting the cancellation requests, or they realized they weren't going to be able to open and people were getting upset, you know, and they wanted their money back, some of these park owners were talking about how they'd already spent the money, or they would already like invest, and they were like, what are we going to do? And I guess I was just surprised at how many do it that way. And I guess, I mean, I think they found out how that could go wrong, I guess.
I think Jellystone recommends.
Yeah, if you don't have a healthy reserve.
Yeah, I mean,
I didn't mean to cut you off. Yeah, I think Jellystone's franchises recommend that their parks do that. I don't know, like we have some clients who've done it, but it's been mostly Jellystones that I've seen from my end.
yeah, I don't, so I guess one way of managing that is maybe opening like a separate account and just keeping the reservations in there and not touching them until, I don't know, I guess. I guess I was just surprised how many actually use them for like future, for like bigger purchases immediately.
Yeah, and you definitely have to have, you know, kind of a reasonable reserve of those, because technically it is that liability. I mean, it's not your revenue yet until you earn it. And so, you know, with that though, you know, you could certainly do a separate bank account. However, you know, most reservation programs, you can pull a deposit liability report to see how much in future reservations you've taken in. So then you can just kind of always know that number. And you don't necessarily have to have a separate bank account unless it makes it easier, you know, for you to not spend it if it's kind of out of sight, out of mind. So that's another option too.
Well, I think a lot of the problem was what you just said, Lindsay, was reasonable. Nobody ever expected something like COVID to happen, where we were getting 90% cancellations.
And that's where, and so that's where we really tried to, and we had a lot of success of having people, you know, keep it on file for camp credit, but we're giving them additional, you know, like 10% more. And so that was pretty helpful at a lot of our parks, because we have that policy at almost all parks, is full payment up front. And so yeah, urging people to kind of do that camp credit route helps owners to not have to pay all this money now, that maybe some of them had already spent some of it.
Is there anything that, based on that experience, Lindsay, you said most of your parks do, is there anything that you've changed now with your cancellation policy, or how things work going forward? Or are you just doing the same thing?
No. Yeah. The biggest thing too with, for us having that payment up front, it generally makes the check-in process easier. And so, you know, now with trying to have less, you know, touchless or just less face-to-face, especially when people are checking in, having them have already paid and they just, hey, you know, pick up, here's your site brochure, you're good to go. It makes that process actually a little easier now with COVID and trying to have less contact.
But couldn't you just do like what hotels do, where they take the credit, you know, you give them the card information and they just don't charge it until you check. I mean, you could theoretically do that. You
could, you certainly could. I think on our end, on the operations side, I think it's an additional thing for front desk staff to have to do. So it's just an additional step, but you certainly could do that as well.
I can share some perspective on this particular issue, because historically health clubs had to deal with this issue, because in the past, I'm going back about 20 years, before a number of different large health club chains went public, they used to take the money and just put it into revenue. And when there was a different companies as they went public, where the SEC made some rulings, and they made all health clubs report on a cash basis going forward if they're going to go public. And the money that you took in advance, which in principle would be a 1-year membership or a 2-year membership, but it also applies to a campground reservation, it's a liability. The money's not income, it's a liability. So you take the money into unearned revenue, and you have this liability where you have to earn the revenue when you give the service. And that's the way we deal with that. And this is at a time I ran a company that was, in today's economy, it would be $1 billion annual revenue company. We were in all throughout the Northeast and Toronto. And I ran the admin and finance for that division of Bally. And we had to take all that money and it just went into an account. And it was unearned revenue until we earned it. And we didn't earn it until after we gave the service. And I think what, Lindsey, what you're talking about is really on a smaller scale. It's very much the same thing, because when you take the revenue, I'd rather have the money than not have the money. So I don't subscribe to what Ben said. To me, I'd rather have the cash, but you don't spend it because you didn't earn it yet until you gave the reservation, until the person showed up. So if you're spending money you haven't earned yet, and now all of a sudden you're scrambling, shame on you, because basically from an accounting perspective, you did the wrong thing.
Right. I think,
yeah, well, and I think that, yeah, that's where it comes down to, you know, knowing what that deposit liability is and knowing how much of the cash in your bank account, you know, or opening a separate bank account. But just knowing what is for future reservations. And, you know, yes, I mean, certainly in a perfect world, yeah, that money would not be spent. But there is also the reality of, for example, a seasonal park where they don't have 6 months of revenue, you know, they often rely on those deposits to kind of get them through. So it kind of comes down to, I mean, and for new park owners, it's harder because they don't have the operating history, but, you know, generally knowing, you know, what is safe to spend. And that's certainly hard to determine, but, you know, knowing that full amount you are liable for, you know, if it came down to it and everybody canceled, you know, knowing that there's that potential and that you would have to pay all that back. So yeah, figuring out what you're comfortable with spending. And again, if you're a seasonal park, you might have to get you through. So it's kind of that balancing act.
well, I think
A lot of parks learned the hard way with this experience.
Yeah.
Nobody anticipated 90 to 95% cancellation rates, and a lot of parks were caught. I mean, I know of parks that have been in operation for 30 or 40 years, and they take all their and have never had this issue before. So I think this is going to change financial planning in terms of campgrounds specifically going forward.
Yeah, and I know some states down here, you know, they've actually complained to the Attorney General, and the Attorney General will actually go after these parks for some of this stuff, and it's created some real rough situations for some of these park owners. It's interesting because some of these states are like, you have to close, and so they close, and you know, they have cancellation policies that don't you know, offer refunds or something. You know, there's different situations, and then the state Attorney General was coming after them because they were forced to close and for a variety of different reasons. So it created some really interesting situations. So, but anyways, Brian, what were you gonna say? Sorry.
We've seen people adjust their cancellation policies to include things now, like force majeure clauses and stuff like that. So not where you won't give the money back, but where you, if something crazy happens, like we just went through, that you get more time to give the money back, maybe, or something like that. So.
Yeah, it's going to change a lot of that administrative side of planning for potential catastrophe. I think nobody saw it coming, obviously.
Now, Lindsey, you mentioned camp credit. So, like, if a park is trying to do that and they have somebody that's absolutely like, well, I'm never coming back to this park, or I was just, you know, traveling through and it's not going to happen, then do you give them a refund, or what, you know, is that what you're doing?
Yeah, it's more of just like giving them that option. And when people hear, you know, especially if it's a park that they know they're going to go to, if it's just a one-time pass-through, then odds are they're not going to be in favor of that. But, you know, if it's a park that maybe a family's been going to, you know, every summer, they know that they'll be back once they feel safer to, or the park's open, then, you know, it's kind of appealing to them to have more money and credit than they expense. And, whether that's something they, can buy in the store or, souvenirs, things like that, the camp credit is helpful for that. So it's more of a giving them that as an option, and kind of last resort is refunding, but just giving them that option. And then, we've had several guests take us up on that. So then the owners didn't have to refund that cash right then. And that certainly helped cover expenses that needed to get covered.
And give them the flexibility too. We've seen some parks extend that camp credit 2-3 years.
Yeah.
You never know.
Yep, exactly. Yep. Yeah. Oh, that's a good point. I would have maybe some expiration date, but certainly being lenient about it, just in light of everything that's gone on, just letting people know that, we're not trying to, take advantage of you or anything like that, and trying to be fair with those policies. And so giving them additional credit, it's been a success for us.
Oh, now, let's say you offer the care credit, that, and this may never happen, but you offer the camp credit, sorry, and then you have a ton of people that want to use it. Does that impact your finances down the road? Like if you had a ton of people doing it, then obviously you aren't going to be making that money down the road either, I guess.
Sure. Yeah. I mean, you wouldn't have that cash coming in, but in terms of, if you're looking at your revenue, it's kind of like the deposit liability. You have like a camp credit liability. So it's kind of the same thing where you're seeing how much money that you have on the books in camp credit to know that that money can be, redeemed later, kind of like a gift certificate. So just knowing that you have that, it can certainly affect the cash coming in, but your revenue, once they stay, then that revenue is earned. So it just depends how you report that on your financials.
Which is why you also set an expiration date, because we all know how many people actually let gift cards and gift certificates go to waste. So.
Yeah, exactly. Yeah. You don't want them carried for years and years and years and years, and you've just got this balance on your balance sheet forever.
Okay. We've been trying to do some stuff on new owners about how COVID has impacted new owners. There's been a bunch of new owners come in, they're 1 or 2 years into their business, and I have to imagine it's impacted them particularly hard because they may have more, payments to make as far as on the property, on the buildings they've purchased. If they've revamped a bunch of stuff, they may be thousands and thousands of dollars. I guess, Lindsey or Paul, have you heard from new owners? How are they doing, I guess?
We know people who purchased parks in January and February who closed right before all this.
Yeah,
so.
I know. I mean, have you worked with any new park owners, and how are they faring, I guess?
I don't have any experience with new park owners. They're either startups that are getting ready to finance a new one, or existing ones that are looking for help with the PPP or the EIDL loan. So I'm going to pass to Lindsey.
I mean, we've got, most of our parks are more seasoned owners, but, we've got a couple that are newer owners. And it is hard. I mean, because you're exactly right. They have more payments. I know for us, a lot of it was, seeing what can reasonably be cut, what can you defer payments on. I mean, a lot of that came down to, we were able to get them where, they were able to skip, 3 loan payments, and that kind of got them through till things picked up and money was coming back in. But I do feel like it's probably been hardest on them, and particularly now for budgeting too. They don't have the operating knowledge. They can certainly request seller finances to see, but planning makes it trickier. So I would just say, reach out. There's so many industry colleagues and partners that can try to help them walk through the best way to try to plan for the future under these circumstances.
I've actually seen some new membership at the association level from brand new parks who are reaching out because they need support. This crazy unexpected time where, they're already maybe struggling to build or develop, and now all of this on top of it. So I think association membership is super valuable in this kind of circumstance too.
Yeah, it's for associations and for accounting people, because it's not just new owners too. It's the existing ones that have on this like basically spur of upgrading for the last 6 years. I mean, it's just been cheap to get.
Yeah, Michael Elliott, we had him on a few months ago, I believe, from Camp and Park Accounting. He just mentioned on our Facebook that a lot of the new park owners he's been working with are doing fine. It kind of depends on the location. He said a lot of them are taking advantage of the disruption in the market and combining it with their energy as new owners to actually exceed, I guess, the prior owners' financials. I guess, I mean, it has been a pretty, once they got past that initial spring. I know during April, I was reading from one park owner, they were like, this is our first year, we built the park, this is our first year it was going to be open. And I mean, I couldn't even imagine that, but I know once we got past that, I think a lot of campground owners are finding success, I think. So hopefully it didn't impact them too much, I guess.
Yeah, hopefully.
I mean, it's just, it's incredible what some of these park owners are going through, you know, seasoned and new park owners. It's just incredible. And it all depends on the location. And some of them are like really close to each other and they have two different, you know, stories. So, but anyways, you know, we've been reading a lot about the PPP loan stuff. The forgiveness part is just all up in the air. I guess, are you, I guess, Paul, you've worked with some of the PPP loan stuff. I guess, are you telling people to apply for forgiveness now, or should they like wait to like iron this all out before they apply for forgiveness?
They should wait. I mean, they've already simplified. There's a new form that came out for a more simplified situation where people might be the only employees, but they're still really working out the details. And now Congress is really talking about a whole different round of legislation, which may or may not include information on the PPP loan. But in our company's situation personally, the lender that we used had really kind of offloaded the forgiveness part to a company that's really going to specialize in that. And they've just taken down their website and just said everything's on hold until they just get all the process down. And I know one thing that happened is the forgiveness application has been delayed more toward the end of the year. So you don't have a gun to your head to apply yet. So the long answer to your short question is to wait.
Yeah, and we've heard from a number of you know, I've read about a number of states offering loan programs, or even like counties loan programs, and or even just grants. I think Virginia has like a grant program they were doing. Have you guys heard about campground owners having success with some of those state and local programs?
I can mention just again, part of the CARES Act money was given to the states and to the counties. So I'm in Orange County, which is a Florida county, the same county that Orlando's in, but I'm in the boonies where I can't see my neighbor. And the county first kicked off a grant program and a loan program that was managed by SCORE, which is part of the SBA. It's Service Corps of Retired Executives, and I'm a SCORE counselor for the federal government. So we were involved with the underwriting of those grants and loan programs that are varied by county and state, because they all got money. It's just a matter of what they decided to do with it. So it could be a campground owner, it could be a Subway, or it could be a McDonald's. It could be anybody that can apply.
Yeah, yeah. And I guess it just helps, you know, if you have a little bit of extra help, I guess there. Lindsay, have you had anybody apply for those grants or extra loans or anything? Have you dealt with any of that?
I haven't. Unfortunately, I don't have a lot of good advice there. We really only dealt with the EIDL and PPP on our end.
Okay. All right. Okay. Yeah. So I know a lot of, So on the PPP loan process, I guess, are people making payments now on those, I guess?
No.
They're
No?
for forgiveness.
No, it's all been delayed until sometime next year, and the majority of the loan, if it's handled properly, will be forgiven, and that would be a function of Lindsey working with her clients or their accounting firm that the campground owner has, working with their firm, just to get the money that was paid in any kind of utilities. Or utilities can be anything. It could be their rent, it could be their phone, it could be their interest on their mortgage, the internet, all the things that they consider utility, as well as their payroll.
Obviously COVID was, I mean, it's a completely different crisis. I guess, what do you guys recommend to park owners as far as, keeping stuff on the books for emergencies like this? Lindsey, what do you tell park owners as far as how much they should be trying to save for their operating and costs and stuff for emergencies like this? Obviously, this one was a completely different emergency than like a hurricane or a wildfire. So.
Mm-hmm. Yeah, and it's so hard. I mean, I don't have like a dollar amount or a percentage. I think a lot of it comes down to, especially after this, I mean, in my thinking, it's, okay, worst case scenario, what do you need to survive, and what do you need to have on hand to maybe refund people? And if you are spending some of that money, let's say for your reservation deposits, if you had to refund all of that, do you have access to cash in one way or another? Can you get access to be able to pay expenses, give refunds? So, kind of depending on your park, it'd be kind of evaluating that. And then, working with, I'm not a CPA, but working with your CPA or your banker, lender, trying to figure out, what you need and, what should you be saving? And if it came down to it, how do you access the cash that you may need?
Yeah.
I think it's personal finance too, right? Like, so me, for example, like if
Mm-hmm.
I have zero income coming in for the next 12 months so that I can pay the essential bills that I need. So that's part of it too, I think.
Mm-hmm. Yeah.
Yeah, I mean, it's just, Lindsey, I guess you work with a lot of park owners. How do park owners fare on the accounting side? Do you run into a lot of issues where they don't keep proper records? Is there more training that needs to be done in that area for campground owners?
Sure. So in our situation, we actually are doing everything for the clients. So the clients, I would say 99% of the clients I work with are completely hands off from their books. And so it's all on our team to make sure that it's proper record keeping. So one of the things that we kind of implement and that I recommend for people doing their own books to do is weekly reconciliation. And I know that sometimes that might seem daunting or, the last thing that you have time for. But I also think that in a time such as this, where you need to know where you stand, and, financials are always important, but particularly right now, to know where you stand, and keeping proper records. And, with our weekly reconciliation process, we are, recording revenue on the books from the reservation program. We are, recording any expenses, recording new bills, paying those bills, and then reconciling, bank accounts and credit cards, so that week to week, park owners know where they stand. And that just helps them know, what are things looking like and how are things right now? And so, I'm sure that park owners who are working on their own, it's difficult. You have so many things, that you need to do. And so, if you can't, have somebody else at the property help you, or if you can't outsource your bookkeeping, my biggest recommendation is to, make use of the technology that's out there, online accounting programs, which I'm sure that's what most people are using anyways. But with that, you've got, apps that you can integrate with that can pull in all of your receipts. you've got automatic bank feeds. It's pulling in all of your charges for you. So you can just code them. So, if you're standing in line for your coffee, you can pull it up on your phone and code, the last 5 credit card charges that came through, and then your books are up to date. So, even though it may seem daunting, or again, sometimes the last thing that you have time for, if you can't outsource it, just, make use of that technology and keep up with it, because if you, not only do you need to know where you stand, but if it does come down to it and you do need, a loan or funding, they've got to see your financials, and to have those ready to go will definitely benefit you in the end.
Well,
If I had my own books, I would not be in business. I have no interest in numbers at all. Just keep
Yeah.
even to sell your park, you need all those documents in place.
Yeah, exactly.
Kara,
Yeah.
how did you keep the books at your park? Was it all paper?
No, well, it was when we first inherited the park in 2010, I believe it was. Yes, everything was kind of paper filed away in bankers' boxes, and kept in an old-fashioned ledger book with pencil and all of that. But no, we transitioned. I mean, we used QuickBooks and integrated that with all of our reservation software, and yeah, definitely took advantage of some technology available. I think, those things have come a long way since 2010. But at the time, yeah, we used whatever we could to streamline the process, which was a lifesaver for me, because certainly in the summertime, especially when your season is super short, having to sit down at a desk and reconcile your books regularly is certainly difficult to fit in when there's lots of other pressing, time-consuming things.
Mm-hmm.
Yeah, and I think that's, I know there's quite a few campground owners that once they get into the season, they just kind of ignore or push everything else off to the side. That's probably not very good as a business owner, I would imagine.
But
your time is limited, so you have to outsource what you can outsource and take advantage of the technology.
Yeah.
And make it work, because you can't do everything. I can't do everything.
Yeah.
Well, especially maybe in situations where, finances are tight and you maybe can't afford to bring someone else in to handle that admin work for you. I know I certainly was guilty of falling behind on my reconciliations through July and August. So then September, October, November, I'm prepping for year end and scrambling. I think that stuff is very common for owners who kind of don't have as much resources at their fingertips in terms of, cash to spend on. It's me staying up late, after I put my kids to bed, finishing up my reconciliations. I think that's overwhelmingly common for campground owners, for sure.
Yeah.
I mean, when I was starting out, we worked with our accountant completely on trade. So I didn't have the money to hire a CPA, not even close. So.
Yeah. Certainly we always used it. We did use a CPA for all of our filing and all of that stuff. But when it came to records and bookkeeping and all of that, I'm more than capable of those things. But yeah, the time constraints on it, I agree with Lindsay. I think, taking advantage of the technology available to you should be number one priority. Not only does it streamline it for you in the bookkeeping process, but also does make it simple to then go to your accountant and say, here's all my stuff. It's in everything there, get things in and filed and done. It's ideal kind of for the entire process, start to finish.
There's probably some kind of a business there between what Lindsay does, service for everybody, and hands off, not doing anything, but maybe just a consulting in the middle where you could help people adopt technology.
Yeah. I mean, I think that's something that, could be a good service. And, I think if people just kind of explore those tools, and again, it's hard to, yes, if you are cash strapped and you can't afford to outsource it, which I know a lot of people are in that boat, then it comes down to, then you probably more than anybody needs to know where your cash position is. And so, as hard as it is, you've got to make time one way or the other for those tasks. And so, yeah, whatever technology or anything you can implement to make that easier on yourself and take less time. But I think that, you know, those folks more than anyone really need to know where their cash is at, so that they've got that.
Sound like my accountant. Like I've got all the technology, and she still yells at me at least once. Anything to do with it.
Yeah.
I know it would be clear, but I still doesn't change my mind.
It's not easy to also kind of from a bookkeeper perspective rein in things like keeping track of every transaction when maybe you have multiple people using accounts, multiple people doing purchases, maybe you know, your business partner isn't great at keeping their receipts and things like that. So then, you know, the longer you wait, you know, reconciliation would be ideal to catch things like that. The longer you wait, the more difficult. Then you get, you know, the ball of receipts, the coffee spilled on them, and
well, and I think with that too, I mean, that's a great point. But you know, especially now on the bookkeeping side, you know, you've got purchases to Walmart and to Amazon. That could be anything. And so, you know, on our end, especially the way that we track the expenses for our clients, we like to break things down by department. And so, you know, when somebody shops at Amazon, was it housekeeping supplies, office supplies, guest service supplies, you know, R&M supplies? Did you buy an outdoor movie theater? You know, there's so many things it could be. And on our end too, then sometimes it gets difficult to know, well, was this just an expense, or was this, you know, something towards a capital improvement project? And so it shouldn't be expense. We need it on a balance sheet. So, you know, I think keeping everything as detailed as you can, and, you know, keeping up with it as much as you can. And I know that that's hard, but that's going to set you up for success in the long run, because 3 months later, when you're trying to figure out this $200 Amazon receipt, it makes it a lot harder, and you got to go find it and see what it was. So keeping up with it the best you can is really going to set you up for success.
The first year I had to do that with my account, she sent me a list like at the end of the year of every Amazon purchase or whatever spreadsheet. She's like, find what all these are. It took me like 2 days. I had to go through like the history of my Amazon. Now I do it once a month for like Amazon, Walmart, Best Buy, you know, things like that.
Combing through the logistical, like, and lots of times you can buy several things from Amazon, but the one receipt has items from every different department.
Exactly.
It's a big undertaking. It's a big task. Bookkeeping.
The first couple of years I would accidentally, like, because I have an Amazon business account too, and I would once in a while I would switch to the wrong one and buy with the wrong, because I have an Amazon business credit card.
Oh no.
So
no wonder she doesn't.
When I was new to my Amazon business account, it's not that hard. They mix the cards right there next to each other. It's easy to default to the wrong one.
Do you ever have issues with park owners like blurring the lines between business and personal purchases? Like they'll take money out of the business. You know how I attended a great seminar like last year about how you know, you set up these different accounts. Your business is a corporation, and you don't want to blur the lines between your corporation and your personal finances. Like if you were to get sued, that could cause issues, I guess. So do you ever have those issues?
I mean, we do see that from time to time, but I think, you know, because we're also so involved in the operations and not just the bookkeeping for 90% of our clients, we try to set them up for success, you know, making sure that, you know, we're looking at all of those things weekly so we can catch it and kind of stop it when we see it and say, hey, we saw this come through, fine if it was an accident, but like, let's make sure we're looking at the right card going forward when you're purchasing. So we try to kind of nip that in the bud if we see that, so that it doesn't get out of control.
Okay. All right. Yeah. And I imagine there's ways that campground owners pay themselves, I guess, out of what they make from the campground, I guess.
You have to have yourself on payroll, but you should have.
Yeah, it depends how they're set up. yeah, what their legal structure is and how that's handled. It's going to vary park to park. But yeah, just making sure that, those are recorded properly on your book. So then, when your CPA gets those books, then they can see, exactly, clearly what did you pay yourself and how did you pay yourself.
Do you have any, we don't need names, but do you have any like horror stories of like when you took over someplace and you were like, what the hell did this person do?
Yeah, I mean, we've got parks where, maybe like, maybe it's, they've got so many different business entities. And so there's like multiple associated with the park. And so bills are coming in and they're under one entity, but maybe it's for this other park. So some of those things happen. But I would say for the most part, we deal a lot with folks who are new owners. And so on our end, it's really exciting because we kind of get to start their books from scratch then. And so we make sure it's set up for success from the get-go. But, the few where it's existing owners that are bringing us in, those are usually the ones where it's a little messier. But again, I think just walking them through the importance and in the end, it's easiest for you and it's easiest for your CPA. And our goal, at Fireside Accounting and just with all the work that we do, we want to be a CPA's best friend. We want them to get books and be like, wow, this was so clean and easy. And so, just trying to help owners understand the importance of that and just helping them achieve that. That's what we're in it for.
I mean, to be clear, I want my CPA to do the same thing, but it fails every time I try. So I want.
Oh, Brian.
I just imagine.
Not my thing. I don't want anything to do with numbers. They bore me. Like I can read them, I can understand them, I can do my accounting. I just don't want to.
Right. It's just the work. Yeah. Yeah. Hey, I get that. And I mean, and that's what we're here for is if somebody is able to offload it, and they're okay kind of handing that over, that's where we do like to kind of step in and to be able to help because, especially as a park owner, you have so many other things that, if you can't afford to offload that, your time is generally spent doing other things. And biggest thing is enhancing that guest experience because that's where you're making your money. That's where you're helping families make memories. They're going to want to return, bring their friends, write good reviews for you. Like that's really what the park owner should be focused on. And so, if they're able to offload that, to somebody like us, that's what we like to help them do so they can focus on what really matters for their park and, why they got into this in the first place.
I was just wondering if you had any stories, where you had to go to a park and like walk into this room just filled with like filing cabinets and it was like sticking out.
Luckily, no.
But
you know what? I'm going to knock on wood now because I'm scared that I've been jinxed. But no, luckily we have not had anything like that happen.
Kara has. Tell your story, Kara. By all means, if you want.
Well, just when we inherited our park, that it was a significant amount of paperwork. Zero computer use prior to that time. Yeah, a really, really big undertaking just to get a picture of where the park stood at that time. And then, going forward, understanding things like operational history and all of those things, especially when you're kind of from the outside and haven't worked in the industry before. Yeah, big undertaking, I think. And I think, there's some generational stuff there, the part coming from generations before us. And there was a lot of resistance to technology and things, but once we were kind of rolling and functional with it, they were really happy and receptive to the improvements in efficiency. And my CPA loves she loves it.
That's perfect. Nice.
All this technology you guys have been talking about, I have to imagine that's been maybe some of the reason, and maybe Paul can talk to this about we're getting so much interest in the outdoor sector from developers too, because they can see like everything down to the numbers they need as far as like, you know, how well of a year this resort has had, and they can see all those numbers, I guess. So, I mean, maybe that's helping them make these decisions, makes it a little easier, I guess. I don't know.
The developers that we've been working with have been either contacted us directly or were referred to us by a architect that specializes in feasibility studies that Brian and I both were on the faculty for the prospective owners workshop. Ron Hurd, you know, we've started to work together on that. So what I've seen anyhow that's worked the best is they get a feasibility study and they really try to understand what the upside of their land development is. And what I've also noticed is that they tend to phase in. So they have different phases, you know, where they first develop it and then have a certain cash flow, and then they continue to develop it if it's going to cash flow and it's going to work. I mean, that's the process I've seen. Probably the one that's been the most interesting to me has been it's a blueberry farm owner here in Florida that's not more than an hour from where I live, and they're going to develop that area from being a blueberry farm to in part being a blueberry farm, and then the rest of it's going to be an RV and campground resort, which has been kind of interesting. And they received a lot of their startup money from the Department of Agriculture, of all things. It was kind of interesting. And then we're helping them with USDA financing for USDA loans because it's in a rural area. They're all over the map. You know, the other ones that we met have been really developers that have land. Most of them have land and they already own the land, and they might have some debt on it, but some of them that I've talked to are just debt free. Like the blueberry farmer, he's like second or third generation in the area, and he doesn't owe any money to anybody. And they just are trying to catch the wave, so to speak, as us old surfers used to say. You know, they're trying to catch the wave and get out there just when the swells are growing, because that's really what's starting to happen. If you think about it from a surfing experience, which I spent my earlier years on a surfboard, you know, you're just catching it when the swells start, and that's what people are doing in the campground industry, because the swell's really just beginning right now.
Yeah. Okay. Yeah. So, I mean, it's great to see what the industry's been doing, and hopefully it continues to do really well. I mean, we get information all the time on new developments. It's just crazy. I thought it might slow down a little bit with the COVID-19 crisis, but if it slowed down, it didn't slow down very much, because I think today I saw a number of groundbreakings happening for RV parks. So it's just been incredible to see what's been going on in the industry. So hopefully it continues. But I had a list of questions, but I think I tackled most of the stuff I wanted to talk about. Brian, did you have any other information you wanted or questions you had on your end?
You did a great job, Ben. You lasted until 12:14 today with your questions. So
I know. I just try to make you proud every week, Brian.
Thank you. Done it.
But I think we tackled everything. Oh,
I have one question. Does your CPA love you? Because we've heard from everybody else. Mine doesn't love me. Kara's loves hers. Lindsay definitely probably loves hers. Does your CPA love you, Ben, when it comes to tax?
I don't have a CPA. So
he's exempt from that question. I
love myself.
That's good. That's important too. So
I'm much smarter than CPAs, so I don't need them.
So, none of the CPAs love it.
Yeah. No, I just don't. I don't have one at the. I don't operate a business. You know, I work for someone, so I'm sure they have a CPA. So I know my boss, so I don't know if the CPA is very happy with him or not. He's kind of old technology, a lot of paper. So, but well, it was great talking with everyone. Thanks, Paul and Lindsay, for coming on, and Kara and Brian. It was nice talking with you as always. So, and thanks everyone for watching, and we'll be back next week. So,
Take care, guys.
goodbye, everyone. Yeah.
Bye-bye.
Bye.